Success is 99% failure. Soichiro Honda. My friends, when you feel like you're just not getting it in the market, then just remember what Mr. Honda said, one of the most successful engineers, car companies in the world. And again, you focus on continuing to plug away. You only lose when you quit. Let's jump into these charts. We see stocks are up for the day along with gold, bonds, and Bitcoin down. Not a whole lot going on in the market, but let's jump in. The S&P 500 after that big up day yesterday, you see it reflected on the half-day chart for Monday. You see it on the two-day candle that closed today, a big green up candle. But as you look at today, you can see that it didn't do a whole lot. Up 0.24%, just 1/4%. We don't have a big green up candle, but it is significant that it popped through the weekly trend line. It was already pushing through on the two-day, and you can see where on Friday it managed at the end of the day to eke right there on the line, and then, of course, jammed up on Monday. Where does that leave us? Well, our trade execution summary grid, which is available to everybody who subscribes, it comes in your email every day. We only send out up to 5 emails a week. If it's a 4-day week for the market, it's 4 emails. That list is never spam, never shared. And you don't have to worry about writing all these numbers down because it's in your email every day. The trade execution summary grid for March 26. Here's where we are. The S&P 500, we have an up short-term probability at 65% that things will keep going in the up direction. Entry point is back a little from where the market closed today. That's at $73.19. We see $573.19. Our exit point is at $578. We got about a 70% accuracy back check on that. That's a move of around close to $5. What is causing that? Well, we're buying at the 573.19 confirmation on a second green Heikin-Ashi candlestick on a 195-minute chart. We want to sell at 578. Why? Because we actually have a short-term resistance there. That is what we are looking at. Now, when we move from the S&P and go to the NASDAQ 100, we see that, again, it was up a little bit more, about double what the S&P was, up 0.75%. As we look at things, we see that we have a green spinning top, of course, after some strong down movements. We look at the two-day chart, look at that nice volume. We look at the half-day chart, and again, big up on Monday, not so much on Tuesday, but still moving in that direction. We're at about 60% of further short upturn activity in the short term. Our entry point is a little bit back from where we are right now at the $489.80 mark. And again, moving up to $495, about a 60% backtest accuracy. We do have some short-term resistance at that level on the 195-minute chart. So again, pay close attention to that. If it pushes through, that of course will change things for us. In fact, if it pushes through, we're looking at things rising on up potentially to the 507 level. And just by the way, on the S&P 500, the $590 level. So again, if it pushes through there, then we expect things to continue. If it hits that and bounces back down, then we'll have some more ratings for you tomorrow. So what do? You might sell part of your position. When you capture that gain, you might let the rest of it ride on the market's money and see if it will blow all the way up to that higher level resistance. Now, let's continue to move through the charts. We're going to transition out of stocks. We're going to go to bonds. And as we take a look at bonds, we see that the TLT 20 year U.S. government bonds is about flat for the day. You can see where it's been going down, strong down on Monday, leveling out. It's down 0.0, so 1/100th%. So pretty much flat on Tuesday, but we do see that red down candle pushing through the weekly trend line quite strongly. Just dropped right through it. Now, again, it wasn't much of a trend line, was it? It's pretty flat. But it did move through it, has moved through it on the candle itself is still touching the trend, still sitting on the trend line, but it's moved through it on the 2-day and, of course, on the half-day as it pushed through it Monday morning. Now, as we continue to look at things, look at the volume on the 2-day, see where the volume goes throughout the course of this week. It's been going down for the 3 prior weeks, but as we look at where things are on TLT, again, our chart is trying to predict some kind of up movement there. Now, I've got 2 charts that I'm looking at, two different sets of equations that we have run. Both of them are more sideways movement than anything else. And again, entry point around the mark where it is right now, the 89.94. If you see green candles forming and things moving up, you do have some short-term resistance at $92. So that could give you a couple of dollars of up movement. If, however, things slide sideways and start pushing over, heading down, you'll see some resistance, or I guess some support if it starts moving down after about the $2 mark down to the 87.80 mark. So again, not a lot to share with you there on any movement with any decisiveness. So again, until that happens, we'll just stand by and watch. Remember, you don't have to trade any of this stuff. First rule of trading, don't lose money. Second rule of trading, don't lose money. Third rule of trading, make money. It's the losses that kill you. Let's move on to gold. As we look at gold, it's up for the day, 0.44%. So, it's not our biggest gainer. I guess our biggest gainer, and again, in a day of slow movement would be the Qs, but it's close. And we look at gold, and of course, what do we see? Well, we see an unbroken, except for the 2 dojis here, unbroken green up candles since things turned around at the beginning of the year. We did have those 2 weeks where it slid sideways, week beginning the 24th February, 3rd of March. But these last 3 weeks now, we look at the high last week of 281.48, this week 279.96. All that volume building over the last 3 weeks. See where the volume goes this week, but we're not hitting the high of last week yet. You can see where things started to weaken after the Tuesday, Wednesday candle of last week, that Thursday, Friday, and then the Monday, Tuesday. Volume's been decreasing too. You can see how things moved up strong on the half-day chart and then started moving over down on Friday and Monday, trying to pick back up here Tuesday. So we are long on gold. We've got a 65% directional probability. The entry point is right around where we are right now, 278.65, just a few cents higher. Exit at short-term resistance is at 282. That's an expected move of $3.35. Backtest accuracy there is 60%. So again, still long gold, hoping to see it continue to move. Now let's check out Bitcoin. We've got some short-term upward probability of 55%. That's not a whole lot, my friends. I'm looking at our other model, much stronger, up in the 80% category. Again, I'm just not that enthusiastic. I am more with this short-term up movement of around just over a coin flip. Like I said, entry point is going to be about where we are right now. Some short-term resistance at the $26 mark. If we look at the other numbers that we ran with higher resistance and support levels, that bullish up movement could go all the way up to $27.20. Our backtest accuracy here is 60%. So again, waiting for Bitcoin to sort of sort itself out. These last 4 days looking better as things have leveled off, and then starting on Thursday, trying to get it going. It really got going on Monday, and then again pulling back a little bit on Tuesday, but seeing it break through that weekly trend line after all those weeks of down movement. That's a good sign. The latest 2-day candle's a decent sign, but there's not a lot of volume backing any of this up. Last time we had above average or above average volumes all the way back to the big down move the week beginning the 24th of February. So none of that gets me excited. What do we want to see? We want to see green candles, wicks on top, no wick on the bottom, with lots of volume. That means the market, that means the buyers are behind driving it up. The opposite is true when things are crashing. If you see red down candles with long wicks on the bottom, high volume, means people are selling the hell out of it. They are dumping it. So again, if you're going short, that's what you want to see. The opposite if you're going long. That's where we are, my friends. You have questions, problems, concerns. I'm always glad to hear from you. CW@chartingwealth.com. God bless. All the best from the whole team at Charting Wealth.